right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Thank you so much for being here. R Pink, welcome in. Thank you for modding for me, as always. Much love to you. Yeshwant, much love to you as well. Ryan Hinson, Bubba Trading, what's up, guys? Good afternoon to you. Samuel S., thank you also for being here and for modding for me, doing a great job there. Jojo, what's up, man? Express or XPR88, Tony CC, thank you guys. Chi-chan, Lil Rich, thank you guys all for being here. So guys, Bitcoin, throughout the week, we have been seeing two things, primarily two things. A lot of people were paying attention to the Bybit point of control around $68,000. And we kept coming up and hitting into that point of control and seeing rejections. And we did get decent rejections from there. But we weren't really seeing a breakdown of the range yet, of this small range since Friday. And what I was looking for was to come up to hit the Coinbase point of control and even maybe wick into that golden pocket that was above the Coinbase point of control. So if we pull that golden pocket, you can see that golden pocket was barely front run yesterday on the high, but I was really looking to come up, hit the point of control of Coinbase and potentially come a little bit higher into this golden pocket and the anchor VWAP and reject from that area. But finally, after hitting the Coinbase point of control, we did see that kind of dump and break to the downside. We broke all the way back down to the value area low of the range, which if you did watch yesterday's video, I was telling you guys that I wasn't really interested in the new monthly level. We had a new monthly level that confirmed yesterday. Let me go ahead and turn that on the charts. Here we go. A new monthly level at 67,000 pretty much. And then there was a local golden pocket that was right next to that monthly level. But I said I wasn't really interested in taking this local golden pocket or this monthly. I said we might see a small bounce, but it's really not a good level to look for support for me. And then I said, I don't even like the bigger golden pocket because there's not a lot of support confluence within that bigger golden pocket. I said, what looks much better to me is to come down to the 786 Fibonacci where we have the value area low and some key liquidity from Tuesday's lows into that value area low. We did end up dumping, continuing to dump down today, and we hit that value area low. We got that liquidity grab, very nice, very clean liquidity grab with confirmations, guys, and I just missed this trade. I didn't take it. I was in a little bit late. I saw after this candle started pumping, I missed it. So I had to wait for a bit of a retrace to get in. And once we reclaimed the value, the VWAP, I just entered a long, just probably an hour ago or so, this long position right here on the reclaim of the VWAP. I'm in this and I'm looking to take it up to kind of fill in some of this fair value gap from this candle here into our local golden pocket. If we pull a golden pocket from yesterday's highs to today's lows, you can see that that golden pocket is kind of a TP1 for me. And that's a nice, decent 3.75 scalp there. But if you did get in, I did post this morning in the Telegram before we hit into this level. And I talked about it yesterday in yesterday's video, that this was the support level that was the best support level as far as confluence goes. Because guys, in these sideways ranges, we know that the best levels to look at are liquidity and volume levels. So we had the value area low down here. We had the liquidity grab down here. And of course, we had some Fibonacci confluence as well. So we are seeing the rejection from the POC, which overall is kind of bearish, right? And I've been saying since last Friday that this entire move up looked more like a corrective move up before ultimately seeing potentially a big dump down. But we were just range trading, right? Because we're holding the value area low of the range until we really start to break and lose that value area low. Our mindset, or my mindset right now, is just trade the range until it breaks. So we're looking for shorts at key resistances. We're looking for longs at key supports and kind of playing in scalp mode right now, like day trade to scalp trade mode, until we see a bigger resolution of this range, either a break up above the POC or a breakdown below the value area low. We did get some nice confirmations coming into this low. You can see here lower lows on the price action. Market Cipher was giving those higher lows. Nami, not quite. Nami did not print the bull divs, but if we go in onto the 30-minute chart, on the 30-minute chart, you can see that Market Cipher had the very nice bull divs, and so did Nami as well, with money flow coming to the upside here. And of just really just a nice swing failure pattern long position. Really nice scalp long position that could turn into something bigger. Overall, I still expect a potential, the bearish macro scenario is more likely to mean overall, meaning that we could see that big, this range high at $76,000. It started with an impulse to the downside, 1, 2, 3, 4, 5, followed by that 3-wave WXY correction, making a lower high. And because of that, we're looking for a potential bigger breakdown to take out our 60K lows. But this range from last Friday, and I covered this in yesterday's video, this range from last Friday is starting to become a little bit long. If we were going to be in a wave 3 that went 1, 2, 3, 4, 5 and see a bigger breakdown like this scenario, I wanted to see that wave 3 continue. Only a small bounce or a quicker bounce from the POC or from the value area low up to the POC potentially. But we didn't get that. We're getting a little bit too long of a range here since last Friday. So now, and in yesterday's video, I talked about how we should be looking at a double 1-2 impulse instead of the, let me zoom out to the 4-hour chart. Instead of looking for the big wave 3 breakdown, we're now looking at this more as a wave 1, wave 2. Here's your internal wave 1, internal wave 2, and then we might see that big breakdown and then see some 4-5s coming in here to finish a bigger impulse to the downside, really taking out your 60K lows. And I would love to come to like 58K to 57K. That would be the primary scenario on the more macro time frame for me. But we are just trading the range, right? And until with us just trading the range, we have to respect that we could just continue to chop within this range for a bit. And the value area low is holding. Every time we come down there, we do have some nice bullish divergences on the chart. And even locally today, nice bullish divergences on the chart. And we are seeing strong bounces, and we are seeing the value area low hold. So is there a possibility that we could be seeing some sort of bigger corrective move in here before seeing that dump? Kind of, you have your wave 1 and then your wave 2 is kind of an extended sort of flat correction in here before seeing that big dump come in. And that is a possibility to me. That is a possibility that we do make another push up. I understand we've been front running levels lately, especially golden pockets. Like we front ran the golden pocket a couple days ago during the stream on Monday. Here, we front ran a local golden pocket. We pushed up, we made new highs. And then yesterday, we had front run our bigger golden pocket at 69,321 that was just above us. And that is frustrating to see those front runs of the golden pockets. But we haven't hit that golden pocket yet. So could we see another move up here to come up there and actually hit that golden pocket, grab the liquidity, and then maybe make a move down or continuation to the upside? We still do have a lot of liquidity above us. And I showed you guys yesterday, if we look at the last week of price action, we do have a lot of liquidity, first off, above yesterday's highs. You can see above yesterday's highs, a lot of liquidity resting up there. That is locally our strongest liquidity is above us. And then if we zoom out and look at more of the whole range that's been developing over the past 2 months, our significant amount of liquidity is at $72,000. And with so many people looking so bearish, are the market makers going to push us up there to either grab the $69,000, $70,000 liquidity, or even up to grab that $72,000 liquidity above us? And it just has me a little bit worried that we could see that push up to those areas to grab that liquidity ultimately before seeing the breakdown. Now, as long as we don't take out the 72K high, we still do have that double 1-2 impulse that is in my opinion, the highest probability. So, the wave 1 here, the wave 2, secondary wave 1, secondary wave 2, which this might extend for a bit, right? And then we could see that big 3 to the downside. As long as we don't take out this high at $72,000, then that is still a valid scenario. The second we do come up here and take out that high at $72,000, we would have to rework the counts here, and we would kind of have to look at maybe our bigger bearish breakdown that is not going to happen until we reach higher levels, maybe even up to $78,000. But this is kind of what I'm just looking at, trading the range still. This range is now getting pretty mature, guys. We have rotated this range many times now. And so when you start to rotate this range many times, it is getting more mature, and we are probably due for a resolution within this range, probably within the next week. Maybe it can extend to a week and a half, 2 weeks, but I would say it's getting mature. And I am still thinking that even after seeing a local bounce here from the value area low, we could see that big breakdown continue. From yesterday's highs, what I was looking at was a double 1-2 impulse. Now, I don't like necessarily the way this first move down from yesterday's high looks in some ways to me more like a 3-wave corrective move. And if you're starting in an impulse, you want to start your wave ones with a 5-wave move down. If you zoom in on the lower time frames, you can force like a contracting diagonal in here as a wave one. So keeping it as a possibility, we have the wave one, wave two, secondary wave one, secondary wave two. We got our big breakdown in our wave three. We got a wave four, a wave five, and now we need to see one more four and one more five. 4, 5. We could see something like that. Or you could say that all of this was the breakdown in the third wave. We're seeing a rise in 4 right now, and then we're going to see some 4, 5s come in here. I don't really like it though, guys. I don't like it too much because the way this move looks, if you not force it, it looks more like a 3-wave corrective move. And also at the lows here, we only had that 1, 4, 5. And generally your second 4 and your second 5 doesn't take out the highs of your first 4. So we have taken out those highs. Could this be a flat correction in here? And then we're going to see that dump, like one wave 4 that's a flat correction. Then we're going to see the dump. Yes, it could still be a possibility. But if we look on the order flow right now, on the order flow, we were seeing some pretty nice, I guess it's starting to go away now. We were seeing some bullish CVD absorption locally, but now we're seeing that big drop in open interest. So from, these highs here, you were seeing some lower highs come in and your open interest was increasing a little bit. So some bullish CVD absorption happening. I guess actually that did play out because after seeing that bullish CVD absorption, the target for that absorption was to take out this high. So we did end up taking out that high, letting that local bullish absorption play out. And then after taking out the high, we saw a dump back down to take out those range lows right around the VWAP. I still think we could see a little bit of a rise up, and we do have this fair value gap now that's been created with this dump that happened, last night and a little bit of yesterday and last night. And so I would like to, at least now that we're breaking above VWAP and kind of chopping around VWAP and looking like we want to flip it to support, I would like to come up to that golden pocket, which if I pull that golden pocket again, it is kind of a nice support resistance flip locally. You can see just here, support, support, support. Now if we come up to it, it could act as resistance. Actually, if I just, let's just take this and let's just pull this, something like this. You can see how it was resistance, 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 support, support. So now it could act as a resistance again if we come up to that area. And that would just be a TP1 to lock in some of the trade, the long trade. And then I would let the rest play out. The next TP I would take would be taking out yesterday's highs into that golden pocket. And then if it rolls over from here, I just get stopped out on the rest, and it's not as big as a win I wanted, but at least it's a win. All right, let me check the chat here. Welcome in, everybody. Thank you so much for being here. Please hit the like button. If you get any sort of insight into the market from this live stream, or if you're just enjoying the live stream, please hit the like button. Please subscribe to the channel. And let's see. Let me read this chat here. I think we are going to see mostly sideways price action for the whole next week since there's a holiday on Monday. Yeah, well, okay. I understand that on holidays, where banks are closed and markets are closed, we definitely see lower volume. But leading up to the holidays, sometimes you do get some volatility leading up to the holidays. What the volatility that was caused yesterday was really when Trump went live and he started doing his speech that he had, his address to the nation. That was a little bit of a bearish catalyst because he talked about really escalation of what's happening around the world geopolitically. And it caused oil prices to spike pretty rapidly, and it caused some risk on assets to sell off a bit, and some of the traditional markets sold off a bit. But we do have to remember, guys, this push down was the catalyst for it, was kind of news. And yes, we were at technical resistance up here, but when you do see a kind of a violent or aggressive push down because of news, oftentimes you will bounce from a support level and kind of retrace and refill that imbalance that news dump caused, or news pump in some cases. So that is why also I'm looking potentially to come up a little bit higher here. Okay. Golden Liquidations, welcome in. Crypto OG Havoca, welcome in as well. And Machi HK, what's up, brother? It's good to see you as always. And Dr. Go, thank you guys all for being here. All right. Range forever, right? Samuel, it does seem like we've been in, like, this year, this last 6-7 months, it's been pretty crazy. We had a 3-month long range up here, which everyone was getting a bit, wary on, and it caused some people to make some bad decisions towards the end. And then now, after seeing a week of dumpage, 2 weeks of dumpage, you're getting another like 3 month long range here. So it is getting kind of frustrating for many people to trade Bitcoin. But the thing is, guys, range trading of Bitcoin is actually where a lot of the profits can come in. And any asset, whether it's Bitcoin, most of the assets, they range more than they trend. So, you have these larger trends to the downside, but you get ranges, sideways ranges within those trends to the downside. And so an asset does tend to range more than it has these aggressive trends, unless it's like the S&P 500, right? Which is generally always trending sideways and up for the most part, with quick moves down and then it goes back sideways and up. But yeah, I mean, this range here, I really do think this range is coming to an end soon. And what I will say, let me just go on to a different chart here, a cleaner chart within this range. Get rid of this. So the one thing about this range is, obviously this push up here, it didn't really look impulsive to me. Let me get rid of this. It didn't look too impulsive to me at all. And because of that, and because we were rejecting from some key anchored VWAPs, just like we rejected from some key anchored VWAPs above us, I was really expecting that bigger impulse down to take out those lows. And I still am. I mean, this here is starting to look really channel-y in here. And actually what we can do is we can pull a channel on that. Let's zoom into the 4-hour chart. And let's look at our channel here. So there's your kind of descending channel that you've been from the range highs. We're kind of trending within this descending channel. And yesterday, you saw that kind of fake out of the channel for just a itty bit, really no significant closes above it. And then you dump kind of to the midline today, which is also happens to be the value area low of the range. But when we see these channel structures, right? You see these channel structures, you're either going to get the big breakout, because when you do break out of a descending channel like this, if you can break out and actually see a real breakout, not a little fake out like this, then you generally will see a aggressive move up to sweep at least the second pivot of the channel, the liquidity trail that was created, at least the second pivot, if not the liquidity of the entire channel. On the other hand, if you do see that rejection followed by an impulse at the top of the channel, sometimes you can see that big third wave that dumps you down through the base of the channel. And then you kind of get your 4s, 5s, like back testing that channel into some pretty key support levels. So I will be paying attention to this channel, watching for the breakouts or breakdowns of this channel. But this is classic double 1-2 impulse looking price action. And it does, I do have to say, it does look nice. If we look at just throwing on, let's just throw on our path tool real quick. Where's that? Is it up here? I always have trouble finding the path tool. There we go. It's in here. And we look at just this structure. I mean, that looks very nice for a double 1-2, right? Your primary one is longer than your secondary one. Your primary 2 is similar, but a little bit longer than your secondary 2. And then you would expect to see that kind of big third wave come into the downside, followed by some of these 4-5s in here. Right? And I'm not saying like, you know, we would throw this up here, something like that, you know. And of course, I would probably shorten this third wave a little bit and be looking for these kind of back tests in here. Something like that to see this impulse to the downside end. Okay, yeah, Mr. Reke-chun, thank you so much for the kind comment, man. Absolutely, and thank you for being here. That is an expanding diagonal, brother. Okay, let's see, followed by WXY. Are you talking about, Bubba Trading, what time frame are you talking about on? Are you talking about the larger, this area here being an expanding diagonal? This maybe is that what you're looking at, some sort of expanding diagonal in here followed by a WXY correction? Man, expanding diagonals are very, very rare, even more rare than a contracting diagonal, and a contracting diagonal is already pretty rare in Elliott wave. So yes, there is, I mean, that there is a possibility it could be that, but really you want to go with the higher probability scenarios on the chart. Sometimes the low probability plays out, though. Sometimes that does happen. Or you're talking about very locally. Okay, let me see here. 12-minute time frame here. I think, are you talking about from yesterday? Up in here? You'll have to give me some clarification on what you're looking at there. Why is there a double 1-2? Wait, why is there a double 1-2? Isn't this normal? Just a Bitcoin or crypto thing? I thought 5-wave usually. Yes. So there's variations of impulsive structures. Arthas, Salvatore, there's variations of impulsive structure. So obviously your most common impulsive structure is the 5-wave move, right? 1, 2, 3, 4, 5, where your wave 1 highs do not overlap with your wave 4 lows. And that's your big gap, is generally your third wave is your longest, most explosive move to the upside. But there are variations when you do see overlap between the highs and lows of wave, like say if this was the high of wave 1 and this was the low of wave 4, and then there's overlap in here, that is a hard invalidation in Elliott rules for impulses. So oftentimes you'll get this primary 1, secondary 2, a secondary 1, and a secondary 2. You're just stacking 1-2s, and then you get that big breakout in a 3. And in that scenario, if you have 2 1-2s, you're always looking for 2 4-5s. You have symmetry at the end, right? But as long as there's overlap between these highs and these lows, if there's any overlap at all, you cannot say that that's like a 1 2 3 4 5, unless there is one scenario where you can, in a contracting diagonal, that is allowed to happen, which is also a motive wave. A contracting diagonal is also a motive wave, but a contracting diagonal is far less of a probability than a double 1-2. So if you do have this overlap, let me just get rid of all of this and zoom out here. So if you do have overlap between those highs and those lows, which you can see here, overlap between the highs and the lows, right? Then you would say, okay, and first of all, we know that this was most probable to be an impulse, a 5-wave impulse here. So a wave 1, you got your 3-wave WXY corrective move in a wave 2. This move here, there is a way to count this as a 5-wave move. But you see there's overlap between these lows and these highs, right? So because of that, you can't really say it's a 1, 2, 3, 4, and then maybe a 5 coming in here soon. You would have to say, okay, it's a double 1, 2 rather than a contracting diagonal, because double 1, 2s happen more frequently. They're more probable to happen. So you generally want to go with the higher probability scenario instead of saying this could be some sort of contracting diagonal in here. You would rather go with, until it's invalidated, a double 1, 2 impulse is the bigger probability before seeing that contracting diagonal. But either way, even if this was a contracting diagonal, right? 1, 2, 3, 4, you're still looking for a new low below the weekend lows of last weekend. And if it's a wave 3, then it's going to keep breaking down aggressively. Instead of like maybe just making a low into the bottom of the channel, you're probably going to break this thing down. Time Attack, welcome in, my friend. And Crypto Clown World, welcome in as well. How much TPD would you take there? I'm going to take out 50%. Arthur, at that local golden pocket. Sorry, Arth S. I'm going to take out 50% at that local golden pocket if we do make it up there. Another thing I'm going to be looking at here is, I hate to say this, you know, as far as pattern trading goes, but this could be some sort of like head and shoulders thing. And if you start to lose and break that VWAP down, then you might see that next low coming in. And then we could say maybe this was a flat and a 4 before seeing that breakdown in a 5. I don't like how high, if it's a flat, I don't like how high that flat went. Because if we look at our expansion targets, let me just throw on, where's that? Expansion targets. I guess, yeah, we did 1 point. You can come up to the 1.382. So let me just do this. Actually, you hit that 1.382 perfectly, which is a flat target, right? So doesn't look too bad, actually, for a flat. Hit that 1.382. So all of this could have been a flat in a 4, and then you're going to see a dump in a 5 to make another new low. You'd want to lose the VWAP pretty aggressively. I just want to check this out. Are we rejecting right now from our local golden pocket? Yeah. Okay, guys, we're coming up to our very, very local golden pocket and seeing a pretty harsh rejection here. Man, I'm going to be patient and hold this trade. I don't like how we're rejecting from this golden pocket at 67,000. Also, remember that monthly level that we confirmed yesterday. Where is that monthly level of, let me go back to the Coinbase chart where my object tree is. But that monthly level on the chart that we broke through this morning, did I delete it? Was at 67K, pretty much. I'm just going to throw that back on the chart, guys. Monthly. So let's go to the 15-minute. Yeah, 67, and our golden pocket, I guess, was a little bit higher. Coinbase did not hit the golden pocket. Wow, it's so interesting, guys. Coinbase, for some reason, just very recently has been front running a lot of the golden pockets. But if we go back to the Bybit USD chart, you can see that that was a perfect hit of the golden pocket. Very interesting. I want to check out order flow real quick. What does order flow look like? All right. I mean, we are just getting some, it's pretty much positions closing right now. All in here, positions are closing. Some of those positions closing were the shorts that are closing, and that's why you're seeing this CVD increase right now. Maybe they're, you know, kind of at break even or something, and they're trying to get out because they think this thing might break up. I will say this. This is not absorption, but you are seeing from today's lows or those those lows earlier today, some pretty nice bullish CVD divergences here. Higher lows in the price action, significant lower lows in the CVD. It's just the one big thing is it's on a drop in open interest. You want this to be on a steady increase in open interest showing absorption, but we're not seeing that. We're seeing just CVD divergences here, bullish CVD divergences. Let's go on to NAMI and Market Cipher on the 5-minute, and let's see how does this look. Yeah, I mean, we were seeing some 5-minute bear divs from these highs. A little bit of 5-minute bear div in there, but nothing too aggressive. And actually, the money flow is still coming up. And on Market Cipher, it's kind of just topping out a little bit. So I would like to see us continue up here locally. Okay, please check SPY bounce. Yeah, I will check the SPY in just a second here. B Team Crypto, what's up, man? Welcome in. Trump didn't say anything new. People were predicting it was going to be a victory speech and a scaling down. Yes, so that's the thing. I think the big thing that threw it off is a lot of people thought he was going to like talk about scaling down and getting out. And he did talk about that, but he talked about first going in super hard for 2 weeks and causing some, what do you say, bringing him back to the Stone Age and stuff like that. So I think that kind of just caused a little bit of a reaction in the markets, a bearish reaction, and especially with like oil, with supply and demand of oil. Static Attack, welcome in. What's up to you? Yeah, Chop Fest for real, right? Time Attack, 6-7. Okay, markets are closed tomorrow for Good Friday, not on Monday. Okay, is that what it is? Tomorrow's Good Friday? Wow, I am a little bit behind. Where would I buy spot? 58K or lower. If we do make another new low into 58K, I do plan to buy some spot there. Actually, I already have a limit order at 57, wherever that naked monthly point of control is. Let me zoom out here. And right on that naked monthly point of control, I do have a limit order set all ready to buy some spot. And I'm comfortable, even if we go lower, guys, even if we drop into the 40s, I'm comfortable starting to DCA on the next major low. 57,889. Naked monthly. Boom Doc Saint, welcome in. Good afternoon to you as well. The move from the last local top on the 15-minute. Okay, let me see here, Bubba. So this last local top at 69,280, and you said that was a contracting diagonal in here, followed by a WXY correction. Or you said an expanding diagonal, followed by a WXY. But the thing with that, so Bubba, I get what you're saying there. The thing with that, well, first of all, it doesn't look like the cleanest expanding diagonal, because this didn't keep expanding down here very much. But so as far as Elliott wave probabilities go, you want to go with always the higher probability scenario rather than the lower scenario. And yes, sometimes it is the lower scenario, but a double 1-2 is far more probable than an expanding diagonal. So generally, you start with the theory that this is a double 1-2 rather than an expanding diagonal. But either way, if that's a double 1-2, here's your 3, 4, 5, and then yes, could this be a second 4 before seeing a 5, or could all of this be a flat and a 4? We just showed that it came up to that 1.382 perfectly. So all of this could be your first 4, and then you would expect a 5, and then another 4, and then another 5. And that is a possibility as well. And that would be really choppy. Gosh, continuing the chop that we've been seeing, the horde chop we've been seeing. Okay. You call a 3-wave move down. Is it? Oh, what you called a 3-wave move down. Yes, this here. Okay. Yeah, like I said, you could force a motive wave into that. It's just, you have to kind of zoom in onto the lower time frames, and it's just, I don't like Elliott waves on the under the 15-minute time frame. It gets pretty, the market is based off human psychology, and that's what Elliott waves are trying to predict, is human psychology. The market based off human psychology. But when you start to get into like the micro time frames, it does kind of break down a little bit, or it's not like perfect, right? But yeah, I get what you're saying, Bubba Trading. Thank you for pointing out that as an example there, that we could definitely keep an eye on that as that scenario. Quiet Alpha 89, thank you for the kind comment, man. It's been very frustrating chopping price action recently. Hope a big move is coming soon. I'm in a short. Awesome. Well, Quiet Alpha, I do think the higher time frames are signaling for a bearish move to dump below 60Ks, because, and I know I've covered this in depth with you guys, but this range that we've been in for the past 2 months, first off, we did reject from a pretty key resistance up here. It was our 0.5 Fibonacci. Let me go to the cleaner chart. It was our 0.5 Fibonacci, and it was the anchored VWAP, right? So let me just go out to the daily time frame, and you can see on the daily time frame, there was a wick above the anchored VWAP, but the candle bodies closed at the anchored VWAP. Also, if we pull that, those wave 4 targets, right, are between the 382 and the 0.5. And sorry, that's not the right wave 3. Right there. Those wave 3 targets are between the 0.3, 382 and the 0.5 Fibonacci. So what we were originally looking at, and I would say this has pretty much been invalidated now because of how long this range is going. Time is not a hard invalidation in Elliott waves, but it significantly reduces the probabilities. But eventually, at the start of this breakdown, we were looking at a wave 1 here, a running flat in a wave 2. Obviously, this was our big breakdown in a wave 3 that came to like the 3.618. And then we were looking for a wave 4 that could last 1 week to 4 weeks. Really, you didn't want to expend like a max of 6 weeks, right? Once you start getting past 6 weeks, it significantly reduces the probabilities. But we were looking for this structure to be a corrective structure before one more breakdown to take out your 60K lows. Now, because this is lasting so long in here, it actually shifted the macro probabilities to having this be a WXY correction rather than it being a 5-wave impulse like this with an extended 5th wave, right? Your extended 5th wave would bring you below 60K because you needed within that 5th wave 1, 2, 3, 4, 5. You needed to see a new low being put in to finish the 5th wave. But because this range is now taking so long here, it actually reduces the probabilities that this is an impulse to the downside from the all-time high. And now it makes it more probable that this is a larger WXY correction. But even so, even if this is a larger WXY correction, you have your 3-wave move here in your W. You have your 3-wave move here in your X. And then inside your Y, you're looking for an ABC. You're looking for a 3-wave move, right? But you're still looking for this last part of the Y wave to take out your 60K lows. So no matter whether it's a WXY or it is the impulse that has just a very, very long wave 4 in here, either way, you're looking to come down to take out those lows. Now, could this range kind of continue for a bit in here, coming all the way up to the golden pocket before seeing that last move down, and you see this kind of really shitty wave Y in here, really extended shitty wave Y? Yes, it could. And until we actually break this range, guys, one way or the other, I mean, we just have to play the probabilities. We don't have enough clear data yet. What I will say with this is we have attempted to break that range a couple times, and we have failed both times. The bulls had their chances, specifically on the last high, right? So if we zoom in into this range here, and let me just hide this. If we zoom in into this range here and we look at, you could have seen, once again, a 1, 2, 1, 2. Now, I already did not like that because your secondary wave 2 and your secondary wave 1 and your secondary wave 2 are larger than your primary, which is very uncommon. You needed this 3 to continue, a breakout to the upside, breaking above that anchored VWAP, and then really probably rejecting from 78 and then maybe seeing some 4.5s coming up to 85. But we didn't see that. And if we pull our volume profile here of this range, you've already seen one attempt to break out of the value area high. You failed. And then kind of this attempt that lasted a few days and it failed. Then you fell back inside. You back tested bearishly. First of all, falling back inside after rejecting from a macro resistance above the value area high, and then falling back inside itself is bearish, right? That means you're more likely to fill it to the low. And we did, but especially now after you bounce from the POC and then you bearishly backtest that value area high, and if you reject on that bearish backtest of the value area high, that's usually when you come in to fill it to the value area low. And that happened. That happened last week, right? So then we fill it to the value area low. We get a bounce up to the Coinbase POC, not the Bybit POC, but the Coinbase POC. We rejected. And generally, now that we're rejecting the Coinbase POC, what's the highest probability is that we're actually going to break the range down. And that's the one thing to be concerned about here. So let me go back to Coinbase, and I will clean up this chart a little bit here, and we'll talk about that on this chart here. So let me just get rid of some of this. So yeah, you can see attempt to break out of the value area high. And I'll just zoom in on to like the 6-hour time frame. Attempt to break out of value area high, fell back inside. And what happened? You fell to value area low, right? Because you attempted a breakout. If you fall back inside the range, you generally will fill the range all the way to the value area low, to the bottom where it's undervalued. That happened. We attempt to break out of the range again. We fail again in here. So what happens? First, you get your immediate time frame back test of the POC, right? You bounce from POC, immediate back test of value area high, secondary back test of value area high, and then you fall to the value area low because you fell back inside of your range. Now we bounce from value area low. You expect to come up to POC. We finally did that yesterday. Came up and actually hit the Coinbase POC. Where was our rejection? At the Coinbase POC and the top of the pitchfork band, or the bottom of the pitchfork band, excuse me. And now, because of that, there is a higher probability that this does dump and actually break this range to the downside. But we saw a strong SFP this morning. And remember, within these sideways ranges, liquidity grabs and volume levels are the most important things. So with us having that Tuesday low into the value area low, there was also our 786 Fibonacci in there with bull divs on the chart as we were coming into that low locally. I mean, it was worth the long. If you guys got in on the long before me, I would be staying in that long. Right now, I'm in a long on the reclaim of the VWAP. Actually, it's in here. I got in on the reclaim of the VWAP because we lost it, and then we started to reclaim it. And so I got in right in here with the stop below the low, obviously, that local low, this guy. Man, I don't like how this is rolling over here. We're starting to see that rollover develop. Hey, stop drawing those bearish lines. Sorry, not quicker. Welcome in, by the way. It's always nice to see you, not quicker. We could dip and grab the low before trying that 618 or 786 above us. Yeah, I think so too. Static attack, I think we could dip. And actually, I mean, this was such a nice long today that why wouldn't you attempt it, especially with the bull divs we were seeing coming into it. But I still am, even if we come up to the golden pocket at wherever that was, let me just, the golden pocket above us, I am still expecting that we could put in that lower high before ultimately dumping. So 67.9 to 68K. we could put in that lower high before breaking this thing down. The monthly looks scary. Let me check that out. You're talking about last month's close or just the whole monthly chart in general? Well, we finally did have our first green candle. So we had 1, 2, 3, 4, 5 red candles, and that's only happened like once or twice ever in Bitcoin's history in the past. In 2017, it happened, or yes, 18. 1, 2, 3, 4, 5, 6. 6 red candles in 2018. But I mean, like, look at, we've rarely seen 5 red monthly candles in a row. So we were due for a good, at least 1 green candle in between. You can see here we had 3 red candles, 1 green, and then you kind of get your red coming in again here. I do think that I would like to see the next major low at 58K be a major low. At this anchored VWAP from the bear market lows in confluence with that naked monthly point of control. There's also 2 daily levels in here. Stacked inside there. Oh, okay. Quiles, thank you so much for the super chat, my man. Much love to you and always appreciate your support. And I see I have another super chat as well. So if you have time, is KITE a lost cause? It dropped. Okay, let me check that. Thank you so much for the super chat. And we will check KITE. Let's see here. KITE. Looks like KITE USDT. Is this the right chart? Let me know if this is the right chart here. But wow, yeah, it does look like. I mean, you're breaking. So this is on the daily chart. It does look like you are breaking some market structure. Now, it's always hard to say your wave 1 from the listing price, but you could be looking at in here a wave 1, a wave 2, 3, 4, and then you could get a 5 in here to finish that impulse. So let's pull this and let's see if we've hit the 0.5 Fibonacci. We're going to put that on log scale. Okay, you've already broken past your 0.5. Have we hit the 618? So if we've hit this 618, yes, we have. Okay, that invalidates that scenario. So forget that scenario. Now we have to say this is more probable, and let's pull our trend-based Fibonacci extinction there. We can pull this from here, and let's look at our 1-to-1 targets. So you are coming between the 1-to-1 and the 1.236, and then I want to pull that fib here going into your golden pocket. We're going to put that on log scale. All right, you are at a pretty crucial support here. Very crucial support, actually. So you can see here, you have that daily level coming in here. A daily level of support. You're filling in this kind of supply in here as well. You have you're between your 1-to-1 and your 1.236. So if this is going to be a 3-wave ABC in here, and you're going to make a higher low, you're at your macro golden pocket, pulled from the last major daily low to the daily high, and you are at a daily level and between the 1-to-1 and the 1.236. So I would say, depending on this daily candle close is actually really important. If you close this daily candle below the 1.236, this is more likely to be a 3rd wave that's going to continue down to the 1.618. So we could put on that 1.618. You're probably going to continue down to like 0.989 there. Let's go in on the lower time frames. What I don't like that we're seeing here on this, I just will say this. Look at this crazy bear dip that we saw. Higher high, higher high, higher high, higher high, higher high. So what? 1, 2, 3, 4, 5 of those. Look at all these lower highs coming in on the momentum waves. Now, like I say with Market Cipher B, you generally don't see the bear dips play out until money flow starts topping out and starts rolling to the downside. So the first few drives we had on the daily time frame, you didn't have the money flow still was overpowering those bear divs. But once you start to create multiple drives of bear div and then the money flow starts to top, so like at This high right here was when you started to see, because that's when money flow was starting to top, right in here. And you had like what, 1, 2, 3, 4 little humps of bear div, 4 little hump drives of bear div. And then that gave you this move down, but you can see how that move down was a 3-wave corrective move. Let me just come in here a little bit better. So you can see how this was a 3-wave corrective move. You did take some liquidity and then you get another high. But then you see a secondary trigger wave in here. Actually, yeah, another bearish divergence driver. And then your money flow really starts draining out here. So this was likely to roll over. Actually, after this high, I would be really concerned. But because this was a 3-wave move, as soon as I took out that high, I would be expecting a big drop. And that's what happened. And as soon as you see this 3-wave move end and start pushing back up kind of into this sideways range, then you're saying, okay, I'm probably looking for a new high. You got the high, you got the extra drive of bear div, and now money flow have been leaving aggressively. You can also see on Nami was printing those bear divs towards the top as well. And then on this lower high, you printed a hidden bear div on the daily time frame. Let's see if that rejected from your golden pocket, because if it did reject from your golden pocket, which yes, pretty much it did, front run of the golden pocket. Let me make sure that that is okay. Yeah, 44% dump to the downside. So you want to leave that on log scale. So you pretty much came up to your golden pocket. That is where you generally put in your wave B high or a wave 2 lower high, right? So this is either an A, B, C, and you're about to find support right now in reverse, or this is a 1, 2, and this 3 is probably going to continue to break down here. What I would say right now is it's at crucial support. At crucial support, being that golden pocket daily and your fib extinction of the ABC target zone. Let me go real quick here, 2-hour chart. Man, I don't like the way the money flow looks on the 2-hour, and you don't have any bull divs on the 2-hour. Let's check our 8-hour money flow. 8-hour money flow on Market Cipher is still leaving, and you do not have bull divs on Market Cipher B. That's pretty bad. Now, on NAMI locally, you can see there's, from this dump here, there is 8-hour bull divs, 3 drives of it, and money flows curving to the upside. NAMI is quicker to confirm. So now that NAMI is showing us a possible bounce from this support area, let's go on to the 4-hour and see if Market Cipher B is showing us a support bounce, a confirmation for a bounce. Man, not really, guys. Even the local bull divs have been invalidated. Oh, I hate to say it, this thing might keep dumping here. I just want to check our 2-day money flow. Yeah, it's leaving pretty aggressively. You can see here on NAMI and on Market Cipher B. I would be very careful with this. Now you're at the support level that needs to hold, and you might get like 1 or 2 green candles in here before continuing down, or you might get something like this, right? A doji red candle followed by a small green candle followed by kind of another small red candle before the breakdown. But I would be really concerned that this is going to continue in a wave 3. If you're scalping this thing, and I have no idea what this is, man, even the 1-hour, I mean, you do have some 1-hour bull divs on money flow and very local 1-hour bull divs on Market Cipher in here. But I don't see too much. I don't see too much from this as far as like a longing perspective. But thank you so much for that super chat there. Okay, guys, I want to take just a second. We'll go back to Bitcoin here. I want to take just a second to shout out the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you'll get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts if you do deposit some pretty large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you trade within the futures markets. And they have some of the best initial deposit bonuses in the entire industry. So, for instance, if you deposit $100, you can get a 50% deposit bonus on that. They're offering 20% deposit bonuses up to $1,000 and 10% deposit bonuses up to $20,000. I've also partnered with BYDFI to create that Telegram community. It is a private community, but it's free. All you have to do to join the community and get in is sign up with BYDFI using my affiliate link and deposit the minimum deposit of $100 or more. And then you can get into the Telegram. All you have to do is click the Telegram link in the description after depositing the money and type in /verify in your BYDFI user ID, which will be right up in next to your character guy up here. And then it'll put you automatically into the Telegram. So /verify in your BYDFI user ID. I do try to keep you guys updated in that Telegram throughout the day on Bitcoin. I try to let you guys know if I'm taking any positions on some of the altcoins and if I'm, closing out trades or anything like that. Second partner of the channel is Blowfin. Blowfin is my second non-KYC exchange I partnered with. They're doing VIP 1 for 30 days. If you deposit just $5, you can get a $10 voucher. And then they are offering some pretty good net deposit bonuses, or those initial deposit bonuses, 10% on $10,000. It is a great exchange. I really do like trading on Blowfin. It's got great user interface as well. So if you're interested, there's a link for Blowfin in the description. And then I have 2 KYC exchanges, MEXC and Bybit. Bybit's offering up to $30,000 in futures trading bonuses, and MEXC's offering a 10% initial deposit bonus up to $1,000. And then lastly, guys, we have NAMI. NAMI is this momentum and money flow indicator at the bottom of your screen, and I use it for all my confirmations on my trades. It helps me enter and exit trades. So as we're coming, to a key level of support, I'm looking for confirmation on the indicators, and it has greatly helped me improve my trade profit that I take by getting me into the good trades that have confirmations and keeping me out of the bad trades that don't have proper confirmations. So if you're interested in purchasing NAMI, I have partnered with them to get you guys 50% off. All you have to do is click the affiliate link in the description below. And then when you're checking out on the NAMI website, in the promotion box, type in Divine50 and you'll get 50% off. Guys, we are starting to dump. That looks like that little head and shoulders could be starting to play out here. I mean, we haven't lost the VWAP yet. Until we lose the VWAP, I'm not concerned, but I'm pretty much at break even on my trade right now. Oof. Okay, looks like this might be a loser. Remember, there was the one scenario where we were just talking about earlier, how this entire thing was a flat in a wave 4 before seeing that wave 5 to come down to make new lows. So there is that possibility where you have your 1, 2, 1, 2. Here's your big 3. All of this was a flat and a 4. Then you get your 5. And then because you have 2 1 2s, you would be looking for another 4 and then another 5 as well. Or I think like Bubba Trading was saying, you could be looking at some sort of expanding diagonal in here for a wave 1. 1, 2. Man, I know, I think you're talking about this in here as some sort of expanding diagonal. What I can see here though, guys, on the local time frame. So look at this 15-minute chart. You break above the VWAP with a nice imbalance candle right here, right? And then look at all these wicks. Look at all the buys coming in on the bounce of the VWAP. Like all of these buys in here. Now, that was because we were seeing bullish absorption, right? When you were seeing all these buys come in here, On Bybit, the VWAP was a little bit lower, but you were seeing bullish absorption. That's why you're seeing all those wicks. All those cells are getting bought up by a whale. You were seeing all of this, right? Actually, it was more here, but yeah. Okay, let me... Nonsense, welcome in, my man. And Selena Anderson, welcome in as well. Chino Crota. Thank you for that kind comment there. Commiserates the crucifixion of Jesus Christ for anyone that doesn't know what Good Friday Day reason. Okay, Time Attack, awesome. Thank you for putting that comment on there. I'm getting more and more used to Nami. A video would be awesome whenever you have time, but I know you've been busy. Tony, I'm glad that Nami's working, or you're getting more used to it and it's working for you, man. That's really awesome to hear. Okay, this week last year is when Bitcoin dumped to 74K. Oh, interesting. This week last year, yeah, beginning of April. I checked the CME BTC chart, and it looks to me it already broke the trend line and backtested it from below. Of course, it can be multiple backtests, but it's interesting. Okay, so CME looks a bit different. Would it go back to 72K first and then dump, or would it first hit 57K, then go back to the 70K levels? Well, I honestly think that that's a very hard one to answer, CJ, because even going up to 72K, I think we're going to get to 57K before 72K. Now, coming up to 70K is a different story, because 70K would be putting in an overall a lower high, right? Because this could be, you know, your 1, 2, 1, 2, and then, or this is going to come up here. This would be like a wave 1, a wave 2, and then you get your 3, 4, 5 in your bigger breakdown. So you could still come up to 70K. Actually, yeah, it would be coming up here like this and then seeing that breakdown. And remember, we have that golden pocket that was front run, and now we have a lot of local liquidity above that high from yesterday at 69.2. All that liquidity up into 70K. But I do think, for me, in my opinion, it's more probable that we take out the 60K lows before taking out the 72K highs. Just my opinion. It is a little bit murky right now because we're not losing the value area low. And the thing is, if this value area low is going to continue to hold, you will eventually see a rotation up to value area high. And value area high is so close to those highs that you might as well just peek above and grab that liquidity as well. Okay, yeah, Grim Reaper Phoenix, thank you for the kind comment, man, and welcome in. I appreciate that kind comment for sure. R-Pink, thank you so much for posting the links in the description. As always, you're awesome and you're always on top of that. Thank you for that. If we run out of things, what do you think of Siren? Let me see. There was something else I had to check. Someone asked me about the SPY, I think it was. The SPY. Give me a second, guys. I got to find that comment. Yeah, SPY. Wait, why am I doing that? Okay, and what did you say? Please check balance. Is the bot, or is this a fake bull trap? On this bounce, you're saying, is this a nice bounce here? Well, what I would say about this is, let me go to the ES chart, which is pretty much the same chart, right? I would say this is probably going to continue a little bit until we get down to this pitchfork midline here. But you do, you know, these bounces are nice. As long as you're not breaking, you have a pretty aggressive steep trend line here, right? A channel that's developing in here. So as long as you're not going to break this channel to the upside, I would say you're more likely to continue down until you get to, you know, 62 or so. So let's come back here. I guess this is a little bit different. Let me see if I can find that pitchfork on this. Man, I would like to, let's look at our very macro pitchfork from the COVID lows here. And then we will make that a skip pitchfork. So yeah, pretty nice respect there. Flip midline, rejected from the upper band, came to the lower band. You chopped around in the upper band, but you were developing some really bad bear divs. So let me go back to the daily. You can see here on the daily chart, and this was just like the S&P 500, right? Look at how crazy all these higher highs in here, and look at this lower highs across the board, and your money flow draining out, crossing into the red. And notice as soon as your daily money flow crossed into the red, that's when you got this steep dump to the downside. Now you are seeing some green dots on the daily time frame, which did happen yesterday, like 2 days ago or so, Tuesday. And Nami was showing some daily bull divs, so that might give you a push up. But what I would be watching for is a break in market structure, right? Because you'll know the trend is ending once you break market structure bullishly. So as soon as you take out this lower high in here at 660, like 661, let's say, then you would say, okay, hey, market structure is breaking. Even if I get a pullback, it's going to be a higher low before making a higher high. And then you could have your left shoulder, head, right shoulder for that inverse head and shoulders type. You know, it's a bottoming reversal pattern is what an inverse head and shoulders is. Let's look at pulling a nice fib in here, and we're going to make sure that's on log scale. Yep. Dang. So yeah, if you came all the way down to, I mean, this thing could drop to the lower band again if it gets really aggressive. But let's look at also our 382, because in a strong trend, the 382 will bounce you. And I would say, if anything, this has been a very, very strong trend to the upside, right? So your 382 is coming in right around that midline. I would really be looking for that possible 382 bounce there. And actually, that's only a 41% move, 45% move to the upside. Let's take, yeah, I guess that's off log scale. All right. And then yeah, and you were seeing some bull divs coming into this low here. You were seeing some slight bull divs in there. But I would say, no, I think there's a higher probability that this continues to the downside. So what we're looking for is after it started rolling, it started really starting to peak out here and starting to go sideways here, right? But then you can see, when did you get the sharp aggressive dump in this channel right here? It was because of the money flow finally crossing into the red on the daily time frame. So what we can look at here is, let's look at our trend. This is your trend to the downside, right? As long as you don't break, and let's actually, man, that's you should bring it always to the first low. So first two lower highs and then that first low. So you are back in the channel. You can see, and now we're back testing right now to see if we're going to hold inside that channel, and it's holding so far, and it's kind of pushing up here. If you do get, the one thing you got to be concerned here is if you push up to the top of the channel and do just SFP that high, it's not necessarily a change in market structure because you're still inside of this trend. But breaking below the trend and then getting back in it is at least somewhat of a sign that you could see a corrective move to the upside. So what I'd be looking for, let's go to the 1 hour chart. Yeah, I mean, I would still be looking for another potential move to the upside, because even if this is a corrective move, you want to see that 3-wave zigzag move. So maybe coming up and taking out 661 into the top of the channel, you might see a pushback up there. But then after that, depending on if you actually break out here or if you reject here on an SFP, I would be looking for a move into kind of this support zone in here. 382 pitchfork midline. One hour actually doesn't look too bad. You did have those nice multiple drives of bull div on NAMI, money flow curving to the upside. And I would look for, now you can see you bounced after breaking back inside of this channel. You bounced and held the bottom as support. So that if you can break above the midline, which we're trying kind of as we speak, right? The last few hours, look at 1, 2, 3, 4, 5 hours. It was holding, and now we're finally having our first hourly candle above it. So I would say that it is possible that this does come up to the highs of the channel. All right, let me get back to the bottom here. What does anyone believe a word that comes out of the orange mouth? Yeah. Think plasma XPL will reject at its next resistance. We can check that in just a second here. Let's see what Bitcoin's doing here. I mean, the VWAP is trying to hold us, guys. If this VWAP can hold, I do think we are going to see a move up to 67.9 to 68K. Awesome. Yeah, guys, please hit the like button. If you get any sort of insight into the market from this live stream, please hit the like button for me. Please subscribe to the channel and share and all that good stuff. Sudeep, welcome in. It's so good to see you, and much love to you as always. And ZMX, thank you guys both for being here. Coin Operated, what is up, my man? Yes, SPY. Okay, I did that. Bansbell, thank you for reminding me about the SPY. We do this at 4 p.m. EST every day. I think it's... Yeah, so I think it's all the people trading perps on Coinbase because the margin requirements change for 2 hours overnight versus intraday. Okay, very interesting. Is that a diamond on the 15 on BTC? Yeah, it could be actually. This sort of... didn't mean to do that. Kind of this like funky diamond looking pattern that you have going on here. You know, kind of, but you know, those diamonds are reversal patterns too. So this might break down. How does the order flow look? Are we starting to see anything else come in? So you saw some of those shorts closing out, interestingly enough, because we're holding the VWAP. Yeah, you did see a lot of fresh shorts coming in. Not a lot, but some shorts coming in here. And now that we were dumping, they started closing out. right? They started closing out when you started dumping here. They're just kind of continuing to close out. And what is the closing out of a short? It's a market long. And that's why we're seeing the CVD increase a little bit here, because those shorts are closing, and that we know positions are closing because your open interest is dropping still. So just some of the shorts that just shorted above the VWAP. I don't know why you'd short above the VWAP, but they're starting to close out, and rightfully so, because VWAP is holding, and it's likely if VWAP holds, it's likely we continue up. Yeah, I do use order flow. Like this in a way is order flow as well, right? The CVD and open interest is order flow. But if you're talking about like footprint charts and stuff, I do use them occasionally, but I don't use like exo charts a whole lot or anything like that. Okay. What about that Samuel cup and handle? Let's see here. Are you talking like, yeah, I mean, it could, are you talking about like some sort of cup and handle like this? Cup handle? I don't know if I would. From today's lows to 67,400. Let's see if we go from Friday. Okay. All right. Not quicker. No, that's awesome. The Samuel cup and handle. It's great stuff. Okay, there was another one that someone wanted me. Guys, I will keep covering Bitcoin, but while Bitcoin is kind of just chopping in here, I will look at some of the other altcoins and stuff, or just some other stuff. So let's see. I think there was someone that just asked me about Plasma XPL. Plasma XPL. That's ticker's XPL. Wow. Is this the chart on this one? Let's see who asked me that. Coin operated, is this the chart you're looking at? Let me know on that. And then please check ETH BTC. And what is your opinion about this pair this year? You think ETH will perform better than Bitcoin? Okay, I'll check ETH BTC real quick, and then coin operated. Let me know if that's the right chart, and I'll go back to that. Wow. Okay, we are actually breaking out of this little range in here. Let's see if we are. Yeah. So actually, I do like what's happening here. This, I think this weekly was an old weekly that we busted through. Let me just double check on that. Yeah. So it was an old weekly that we busted through, and then it was acting as a resistance, but we're breaking above that. So I'll get rid of this weekly on the chart now. And then we can get rid of this. But what you can see here on this lower range on ETH BTC, what happened is we broke out of the range. We back tested the value area high. Because you held this value area high back test, you are expecting to take out this high right here. So yeah, ETH might actually perform a little bit better. And then, but you are at your macro point of control. You can see you're at that macro point of control. So what I would say is you might make one more local high, but you still could reject from this. And this here, this little range here that we're seeing, it does look pretty bearish unless you're in a multiple 1-2, right? Actually, this started with a 3-wave move. So that's not the best thing you want to see there. Oh, actually, that really puts a wrench into it, because what you would want to see in a bullish scenario is if you're looking at some 1-2s, 1-2s, you want to see a break up in a 3. So you'd be breaking above this POC and you'd be expanding, you know, and then you'd probably see your 4-5s coming in to take this liquidity. Obviously, this golden pocket's no longer valuable, but we do have a naked daily and a liquidity grab at 35.3, 35.4 that would be really important. And then you could also look at your Fibonacci 786 is going to be in there, right? So that would be a really nice resistance area. But once again, that first push up right here being a 3-wave move, I don't like that, seeing that in there. Actually, 3-wave move. Okay, let me just do this here. We'll mark out this. This is going to be a really important resistance up here because of the key liquidity that's resting 1, 2, 3 lower highs that are all similar into your 786 and a naked daily point of control. What am I looking for here? Okay, you still haven't hit the golden pocket. So if we're looking at, let me get rid of this. If you're looking at this being an impulse to the downside, followed by your corrective move, and then now from this high, we're looking at a wave 1, wave 2, wave 3. This could be a corrective move in a wave 4 before seeing one more low in a wave 5. So what we want to do is we want to pull our Fibonacci retracement from the highs of wave 3 to the lows of wave 3. And you put on between the 382 and the 0.5 is your wave 4 targets. So you can see where did we reject at that 0.5 Fibonacci. Okay, this could be making one more high locally because we held the back test of the POC. We could make one more high double topping here and ultimately rolling down in that wave 5, right? 1, 2, 3, 4, 5 to finish this thing. So, and it's also the macro POC, guys. And once you lose that macro POC with volume and you start to form what looks like a corrective range underneath it, that's not a bullish sign. Another thing we could be looking at on the daily time frame is if we take out that high. So I would be looking, you know, this high rate in here at 0.3186. You're going to create some pretty significant bear divs. If you come up there and take out that high and SFP it, you're going to be creating some pretty significant bear divs. And that would maybe cause that dump to take out the lows. Yeah, and even on the 4-hour time frame, you could look at this as here's a lower range. Here's kind of your upper range. And so we could even pull a POC of that upper price action in here. Man, okay, that's not good. You attempted to break out of this volume profile, rejected from the POC, and now you're falling back inside the range. If you reject right here, right now, because it's your 382, even though, yeah, we've chopped through the 382 a little bit, but it is still the zone, right? Your zone for the wave 4 is between the 382 and the 0.5. So you hit the 0.5, you know, see this corrective move. If you do reject, you would expect this to fill this little volume profile. Yeah, I mean, so right now, if we reject this back test, I would expect to move down to like POC golden pocket in here. What you want to see, because remember, we're bouncing from the back test of the larger range value area high. If we combined all of this, you're back testing the value area high multiple times and holding it. So you really want to see one more high being made that takes out this guy. 2, 3, 4. Okay, yeah, you still haven't invalidated an impulse in here yet. Okay, let me see if I can find coin operateds. Oh, XPL's a crypto. Okay, current price is 0.13. Okay. I put $200 into XPL at the peak of the bull run. I was up $10 for a week, and now I'm at $25. Dang, man. Ouch. That kind of sucks. Yes, in Time Attack, we will look at Chainlink as well. So let me check Bitcoin very, very briefly here. Then we'll go to XPL, then we'll go to Chainlink. Chopping. Shop City, but it is trying to attempt to break out of this. Yeah. I think we could see a move up, guys, still. Because ultimately we're holding the VWAP. And the VWAP, to me, flipping the VWAP is more important to me than this diamond pattern. So I would be paying more attention to flipping the VWAP. Holy shit. Dude, this thing is pumping. Is this the right chart? It looks like it is because it's at 15. I know you said it was 13.74, but that could have been like an hour ago or less. Let's see here. Yeah, I mean, it looks like this is the right one. So, wow, this thing is pushing up with massive volume. Look at that money flow coming in here. I think this thing is likely to continue pushing up at least. Let's pull our golden pocket, our last big daily golden pocket. You're likely to push up to this guy at the very least. Let me make sure this is not a 30% dump. Actually, that's a 60% dump. So we're going to take this, put this on log scale. Okay, you're at your golden pocket right now. Be very wary. I mean, you're breaking through it and you're continuing. I would be watching for the daily candle to close above or below this because look we also have some key liquidity resting in there. So it could just be an SFP of these highs into this golden pocket before a reversal. But what I will say about this is this looks strong right now. And this could be, you know, your 1, 2, 1, 2, 1. Well, actually, you broke market structure. You don't want to see that. If you take out this low, that invalidates the 1, 2s in there. So then you could be 1, 2, 3, 4, 5 in a contracting diagonal. You get your 3-wave corrective move. So that's an A, a contracting diagonal and an A, which is a motive wave. You get your 3-wave corrective move in a B. So now you're looking for your C. And remember, your C wave often is a giant spike in volume, and it's an impulsive wave that ends on a high amount in volume. So let's take our trend-based Fibonacci extinction, and let's look at, yes, and you're at your 1-to-1 target. Guys, be very careful here, okay? 1-to-1 target, liquidity grab, golden pocket. And let's actually even put this not on log just to see where it would be. I mean, I have to say the log one looks a little bit better. And that is proper because this is more than a 30% drop to the downside. And then we could look at, obviously we had a range in here and we're going to be breaking out of that range with massive spike in volume. The one thing I would be careful about is you're hitting into your correction target, right? If this is a contracting diagonal in a wave one, or an A, excuse me, you get your 3-wave corrective move in a B, and then this is going to be a C. That's where it would likely end, is right around here. It could come up a little bit higher to the 1.236. Now, on the other hand, if this thing continues to push up aggressively, you could be looking at your contracting diagonal in a wave one, because that is a motive wave, a wave two correction here, and then this would be a wave three. And I guarantee you that wave three is probably going to break you up to take out those highs. Yeah. I mean, so the two main levels to look at right now, guys, if it's a wave three, I would be looking for a pullback here. And if it's a C wave, you're probably going to roll over from here and roll down. Money flow looks pretty good on this thing. Let me go to our key 8-hour chart. Yeah, I mean, money flow looks really good and you don't have bear divs here. Gosh, man, there's hope that this could be a breakout in a wave three. Oop. Let me go to our weekly time frame. Okay, we're going to have to pay attention to, wow, this thing has just been down for its life, though. Okay, nothing there. Man, I really like this zone up here. You have this nice daily up here. I mean, the big zone obviously would be the liquidity grab into the 1.618, and then maybe you're going to close that daily candle at the daily level, right? So this is kind of the big zone, but if you want to even narrow that, look for the SFP into the 1.618. You know, you have some pretty extreme liquidity in here. Pretty extreme liquidity trail. The only other daily that you have in there is that guy there. Now that daily is going to be at your non-log golden pocket. So yeah. And your 1.236 is going to be, well, it's in your zone for the correction still. But I mean, the main target I like right now is you are hitting into that 1-to-1. Money flow for all intents and purposes looks good, but I would just be highly concerned because you are seeing that SFP of these highs, or it's not an SFP yet. You are breaking those highs into the 1-to-1. So if you start to close like an hourly candle below 0.1 or 1475, 0.1475, it might roll back over. The one awesome thing you could say is, look at this. You held the value area low, and then you get your push up, kind of a grindy push up in here, but you break the value area high with massive volume. It looks like a true breakout to me. And then you're coming to resistance. God, the main, you know, you're at a major resistance now. If you break above that, I would expect a fast move up to here. And then, of course, the big one is up here. Like this would be the ultimate looking thing. But if you're coming up there to the 1.618 up here, what I'd be looking at is a pullback, right? So you have your wave 1 contracting diagonal, wave 2, wave 3. I would look for a short here, but it would be a short just to come down to the 382 or 0.5 Fibonacci. And this would be happening. It would probably take a few days. Let's put that up there. Let me just hide this real quick. And so you could pull your fib, and this is a theoretical fib right now, but let's go from the lows of this potential wave 3, and I'm just going to put it right on the 1.618. And then yeah, that would be actually really, really nice to see that, because you would be breaking out, you'd be back testing some prior highs or even like the range highs here. But that short from here could still be a really nice short to even bring down to the 382. If you get it, we might fail right now. It doesn't look like it wants to. Okay, 100 bucks and a little short. Okay, cool. On Bitcoin, you got a win there. That's awesome, man. Maris, I'm sorry, I do not know how to say that. Mari Savenio. Thank you for the kind comment. I really appreciate that. And I'm sorry I can't pronounce your name. But I really appreciate that, man. I really appreciate the comment. Really appreciate the support. Can you recommend some safe sources to grow in trading? Yeah, our Pink just posted down below. Jason Casper was a mentor of mine. He's a friend of mine. His course is a genuinely really good course. It's free. A couple other people I can recommend for Elliott Waves. I would recommend Kuhn's Trading. He's got an Elliott Wave compendium that he's developing right now too, like a complete guide to Elliott Waves. Or you can go onto the Elliott Wave International website. That is where I learned a lot of my stuff at. And then I would say for volume profile trading, if you want to learn volume profiles, Frankie Candle is a volume profile trader, and he's a really good trader as well. So those are a couple guys I respect in the field. And of course, I think Andy from Bitcoin Consensus, or I guess it's now, he calls himself Mind Pillar Markets. I think they are also great educators. So those are some resources as far as like video content that you can look at. But what I did a lot is just follow the live streams every day of like traders that are profitable and consistent. And you can learn if you're tuning in every single day and you're kind of picking up what does work for you and leave behind what doesn't. Develop a strategy of your own and just start to play around and find what works for you. But that's what I would say, man. Like, you don't have to spend a bunch of money on courses. You can kind of be self-taught as well. Okay, everyone wants Biddy to go down, including myself, so it probably most likely go. Yeah, go up. Yep. No on XPL. Oh, cool. You got a little short on XPL just now. I mean, dude, that short, if you're in that short and you've already grabbed some profit, and by not financial advice, right? I don't give financial advice. I'm not a financial advisor, but hitting into that one-to-one absolutely perfectly right now, this could turn into a mega short if it's actually going to reject from this area. So I would, if I got into that high right there, I would take a TP1, move my stop loss to break even, and leave this open, because this thing could really roll over. And like, here's the thing. If this is going to be an ABC correction, right? Actually, let me just do this. If this is going to be an ABC correction, contracting diagonal in a wave 1 or A, B, and then you have your C ending right at the 1-to-1, you expect this to roll over in a motive wave to the downside to take out these lows. That could be a mega nuke short where you get a lot of money from that. So it doesn't look like, I have to be honest, based off what I'm seeing now, it does look like it's going to be more the bullish scenario, but you are at your target zone. You hit that 1-to-1 absolutely perfectly right there. And if it is going to be a C expanding on a high amount in volume, yeah, look at this volume at the end of the move, potential end of the move. If it's a wave 3, obviously it's going to break up past this. So if it's a wave 3, guys, you want to see maybe 1 or 2, like 1 4-hour candle, maybe 2, and then you want to see this thing keep breaking up here. If it's going to be a C wave, remember, C waves do end on a high amount in volume, and you could see this really start to break down here. It's also, if it's a 3, as you're coming up to the 1.618, you want to see this even continuing to increase here, this volume, or maybe not increase, but sustain the high spike in volume. But wow. Okay, look at this is interesting. Guys, I don't know if Bitcoin's spiking like this, but this is so interesting here because if we start to lose this 1475, you could be looking at a potential short here. Let me see if this is on BYDFI. Yeah, it is. Okay. Of course, coin operated, of course. Okay, take a look at Tesla. We'll look at Tesla. I just want to watch this for just a second, guys, because I might end up taking a short here if this. We don't see bear divs, though. I don't like how we're not seeing any bear divs on this thing. No, and money flow looks really strong. The one thing that if we start to lose this high, guys, that is going to be, let's just do this here. A short trade. Stop would go above that wick, give it a little bit of breathing room. And at the very least, I would be targeting the back test of that value area high. That's already a 6.6 risk to reward ratio. But if that's an ABC, then your ultimate target for this short is to take out the A wave lows, right? So you could be looking at a mega nuke. Yeah, all the way down here, like a 15-to-1 risk to reward ratio there. Do you like to trade the 8-8? I like to trade the 886. Yes, the 886 in sideways ranges is super, super clean, dude. It's super clean, super good. Was that an 886 fib? Or 882 in your case? But yeah, 882, 886, they're very, very close to each other. And look at Bitcoin doing nothing. Come on, Bitcoin. What the heck, man? Oh, this is so frustrating with Bitcoin. I'm sorry, guys. I just want to look, pay attention to this real quick because now here's the thing on the low time frames on this 15-minute. If we are seeing like chop in here for a bit and like a small descending channel that maybe lasts, 5, 6, 7, 8 hours, it's going to continue to break up here and you're likely looking at a wave 3. But we are starting to lose that. 5-minute candle. I'm going to see if this 5-minute candle closes below. God, that could have been the perfect short right there. It still could be the perfect short here. I have to say the money flow is not on your side. Yeah, money isn't shorting the shit coins. You're right, dude. I don't know what this coin is, though. It looks like it's Plasma was the name of it. I'm not sure exactly what it is, but Just going to wait 30 seconds or so, guys, to see what happens here. While I'm waiting for that, guys, I just got to go grab my water bottle from the other room. I'll be back in like 15 seconds, okay? Just give me 15 seconds. Okay. Well, we didn't close below it. I guess just below it we did. Was that that was a 15-minute too as well. All right, let's look at this. If we are going to short this, your stop loss is at 3.59%. So you could risk about a little bit less than a third of your portfolio. And if you get stopped out, you'll only lose 1%. I mean, the way you do that, guys, is you calculate whatever 1% of your portfolio is. Let's say it's a $1,000 portfolio. Let me just pull up my calculator here. So say we have a $1,000 portfolio. You're risking 1% on this short trade. So that means you're risking $10 because 1% of 1,000 is $10. You're going to divide that by this stop loss percentage, but you move the decimal over 2. So divided by 0.03598, you could put about $277 on the trade. And if you get stopped out, you're only going to lose $10. Now, of course, 1% is different for everyone. So you're going to have to calculate what 1% of your portfolio is. By the way, this is not financial advice. I'm not saying this is a trade. I haven't even entered this yet. I'm still being a little bit patient here. I just don't like how strong this money flow looks. But look at this, the high spike in volume at the end. Your two lines, your stochastic RSI and RSI are together here. And that's generally towards the end. You do at least see small moves down till they break apart. Four-hour is topped out here as well. You have very, I guess I wouldn't call those bear divs. The one thing that's holding me back right now is the money flow. Let's see if we get one more 5-minute candle close below, and then I might look at taking this short. It's worth it for me to risk 1% because if this is an ABC correction and you dump all the way back down, man, that is, you know, a 15-to-1 risk to reward trade. Even coming down to the value area high at 11.25 is a 6-to-1 risk to reward trade. And so that for me is a sweet, you know, trade right there. BTC rejecting on weekly VWAP, minutes time frame curving down. Yes. Okay. Let me just go back to Bitcoin here. We'll come back to XPL. It's rejecting on the weekly VWAP. Okay. Yeah. Very interesting. And minutes time frame curving down. Yeah, the weekly low. Okay, actually, you know what? We could do this. So weekly open, previous week low is down here. Or you're talking about this weekly low? $65.7. I guess that weekly low was put in today, right? Weekend low. Yes. Okay, so previous week low, the weekend low was put in here at 65, pretty much 64,950-ish. Here's the thing, if we do start to roll over here and break down, I mean, guys, there is still the potential of seeing that bearish move to the downside, right? Let me turn off this for a second, because we are looking for, if this is, you know, some 1-2s in here, 3, 4s, 5s, right? Yes, it could come down and take out this low. Absolutely. But even if you do that, say you come down here, you take out that low, you see a small bounce, I would really be watching the back test of the value area low now as resistance, because then that could really give you that. This should be green. That could give you that big continuation in the big dump to the downside. Because if we're looking at on the higher time frames, 1, 2, 1, 2, you're expecting this 3 to continue down, and it's probably going to take out 60K, to be honest. So yeah, I mean, and one thing here with the VWAP holding so strongly, you are probably going to see, if you start to lose and close dailies below this, excuse me, not VWAP, value area low, it's not going to look good. And we do know liquidity is an important driver, and this is a weekend low. So yes, you could come down, grab that weekend low just to come up and bearishly backtest that value area low. And if you reject there, that could be a nice short as well. Right now, we're compressing between the weekly VWAP and the daily VWAP below us. Let me just turn that see, you can see this daily VWAP right here below us. Leverage doesn't matter. So when you calculate a position size, you're calculating your position size based off the stop loss percentage. Mike 941. So if you're using, in that case, because you're only having, say you have $1,000 account and your position size is only at $277, you don't need to use any leverage at all, because you're only entering on $277. Now, you could set your leverage to 10x, but you're still only going to put 277 on there, because what you're not doing is your actual position size. If say you have $1,000 in your account, but let's just say like 800 of it's already tied up in a trade, right? It's already open in another trade. So you only have $200 left of margin left to trade with, but you can put 277 on the position. So you're like, whoa, I need 77 more dollars in order to get the proper position size. That is when you could bump up the leverage to 2x, 3x, 10x, whatever you wanted. Let's just say you bump it up to 10x. Now you're borrowing 9,000 from the exchange, and 1,000 is your own money. So you can put on, you're still putting $277 as the position size. It's just your 200 of it's going to be yours. 70 of it is going to be the exchange's. Leverage should not matter there. No matter what you're doing, you calculate your position size based off your stop loss percentage. The reason why people use leverage is a tool to free up margin for more trades. A lot of these exchanges, we know that crap happens on them, right? So people don't like to keep a lot of money on exchanges. Let's say that you have $1,000 on the exchange, but your real account size is $50,000. You just don't want to put all $50,000 on the account. So you only have $1,000 on the account just because whether you don't want it to go down with the exchange or whatever. So then you would be calculating it off of a $50,000 position. So you get what I'm saying? So what margin is, or what leverage is, it's a way to free up margin so you have money open for other trades. But your position size is always calculated off that stop loss percentage. I want to go back to XPL. Okay. Whew. Guys, look at how, wow, this is a wave 3. Holy cow. This looks like a wave 3. You got a small pullback here, and then you busted straight through it. Actually, you busted up to your non-log golden pocket in your daily, but I wouldn't even be surprised if we do keep going. I really wouldn't be. Volume spiking still. Volume spiking still. Yeah, this looks like it could be a wave 3. Wow. So we might push up to that 21 cent area. I would be wary still because this zone was your non-log golden pocket, and it's the only other daily level within kind of this zone in here. But this thing looks sharp. This thing looks strong right now. I don't know if there's news that's causing this spike, something, fundamental news that's going on with the project itself or anything like that. But yeah, it does look pretty good. Yeah, holy cow. Now, here's the big thing. You just wicked up and you hit the non-log golden pocket in your daily level. If you do start to lose this again, and it doesn't look corrective, you don't want it to be slow zigzaggy. If it's slow zigzaggy like this, that's probably a corrective channel that could last a couple hours before breaking up. And overall, you're still continuing that wave 3. Because remember, your wave 3 started from down here. So you will see small pullbacks in these wave 3s, right? You'll see small pullbacks that you get in these wave 3s, but it's likely to continue with that big impulsive price action. So I wouldn't be surprised if we do see a little bit of a slowdown. The big thing to watch today, guys, is the daily candle close. If the daily candle closes below this high, that is going to be bearish. You could have just wicked up here to hit that non-log golden pocket in the daily. But if you close your daily candle at or below this zone, that is when you could see significant retracement or dump to the downside. What you would like to see, honestly, is this thing continuing to pump. If you close above this golden pocket, the non-log golden pocket, man, you're probably going to come up here. It might take you 3 or 4 days, maybe a week, but you're probably going to come up there pretty quick. Too bad we didn't look at this like an hour or two before. I guess we didn't even really have a back test, a local back test of that value area high. Tesla. I was going to look at Tesla really quickly. And Tesla is hitting into our golden pocket at the bottom of the channel, this descending channel that we've been in. And it's also a pitchfork midline. Man, this actually, Tesla is at a pretty nice support here. So see this, how this was our long that we were potentially looking at here? Golden pocket and the pitchfork midline here. Very nice golden pocket, very nice pitchfork midline. The one big thing with Tesla, just like on the SPY, is you don't have any breaks in market structure, significant breaks in market structure here. You have your lower high, lower high, lower high, lower high, lower high. And is this going to be another lower high? And then you're just going to continue down here. It could come down just a little bit more to hit that naked weekly point of control at 353. But overall, I would say this zone, this big box that we have here that we just entered a couple days ago, is our nice premier zone of support. I actually liked, what was that? Monday's low was perfect because you hit right into that 0.65 golden pocket. You actually hit the pitchfork midline, and it was also the bottom of the channel. Very nice, at least bounce you got from that. And this is a place where you could get a major reversal, right? Up to this golden pocket. Yeah, money flow doesn't look the best here. And if we now, let me just hide this for a second. And if we now look at pulling our Fibonacci from the lows to the highs, you're at your 786 fib support. Actually, this is not a bad spot to look for a potential long, because this was macro support you were hitting into. You get a nice move up. You did break some local structure by breaking these highs in here. You broke some local structure bullishly. Not daily structure. You really want to break this high in order to see like a daily market structure break, right? But after seeing a bounce and breaking a like low time frame market structure, you're coming back and hitting the 786. This is where you could get that wave 3 that breaks the daily structure, and then sees that breakout, right? The 1, 2, 3, 4, 5, which could be just the wave 1 of a much bigger move up to this golden pocket. Actually, this wave 3, you probably see this continuing a lot higher, breaking out of the channel. Ooh, okay. Yeah, I would be very careful about the back test of the value area low, though. Because if we do something like this, guys, a 3-wave corrective move coming up to the top of the channel and the value area low and reject, that's when you see this thing continue down, right? You don't want to see this larger 3-wave move. You want this to continue breaking up here, back inside the volume profile. Money flow on the 1 hour doesn't look the best, but you didn't really have any bear divs. Let's look at our 8-hour money flow. How does 8 hour? Yeah, I mean, NAMI showed bull divs on the bottom and your money flow is curving nicely up. And on Market Cipher B, we didn't have the bull divs, but look at money flow starting to curve up here. Man, I might even go buy some of this. Let's see our daily time frame. Bull divs on the daily on NAMI coming into that key low. This doesn't look too bad, to be honest, guys. This doesn't look too bad here. Let's go to our 2-day. I always also like to watch the 2-day. Okay, it's bottoming out, green dot there. And on NAMI, lower lows here, higher lows. You have 2-day bull div, but you actually have a whole line of bull div forming in here. Actually, no, it's not, because this little hump is lower than this hump. Just barely. But you do have 2-day local bull divs in here, a local drive between these two lows in here. And then the weekly is another big thing we can look at. Ugh, okay. I don't like the weekly money flow. But with the 2-day bull divs that we have, So the weekly, unless it starts rounding out in the next week or two, you might be seeing that 3-wave corrective move to backtest the value area low, right? You could see this because we have daily and 2-day bull divs. You might see something like this that lasts about a week coming up to backtest 400-ish before rolling over. But yeah, you're at a major support here. Not quicker. Very nice support level. That pitchfork midline is going to be nice. I mean, overall, these pitchforks are pretty nicely respected, right? You can see even with this higher volume profile in here, you bounce from the value area low, you come up, you backtest the POC, but it's also the bearish backtest of that upper pitchfork band. You reject, so you expect to at least come down and take out this low here. Doesn't mean you reverse as soon as you take it out. You could be coming down to the next major support, which we are. Then we could look at pulling a volume profile of this triangle formation that was developing. Yeah, and it's also the backtest of the value area high. Guys, this is such crucial support. Look at this, prior range value area high. So anytime you lose an upper range, you will often dump to backtest the highs of your previous range. It's right at that golden pocket. Pitchfork midlines here, golden pocket, value area high. I mean, the one thing I would say is the naked weekly is a little bit lower, so you might make one more new local low into that naked weekly, but this, man, this is looking pretty good. I actually might try to scoop some of this up. If you lose this, unfortunately, the POC value area lows out of, you always got to pay attention to your previous range, POC and value area low. But this golden pocket down here is your more macro golden pocket, and it would be coming into like the base of your lower band, your lower pitchfork band. So remember, we were actually looking for the long position from this area to bring up to your golden pocket, and then a potential short from the golden pocket to bring down to this golden pocket. And that you could even spot trade, right? Okay, let me check Bitcoin very quickly here. Guys, I do got to get going very soon in about 10 minutes. Let me change this back to our session. Oh, gosh, Bitcoin is just looking not so good right now. We're trying to lose the value area low again. Excuse me, I keep mixing those up. We're trying to lose the VWAP again. I don't like that. And this is looking a bit topping reversally on the very low time frames. Left shoulder, head, right shoulder. This could have been your wave 4. Remember, you could be looking at that flat in a wave 4. And we came right up to the 1.382. 1.382, which in an expanded correction is a common target. You came right up to that 1.382. So we would then be looking for a wave 1, wave 2. We'd want to see a 3, 4, 5. You'd want to take out at the very least this low. So if we start to dump aggressively here, you're most likely going to take out that low. And then let's just check XPL real quickly here, guys. XPL USDT. Oh my gosh. Dude. Well, that golden pocket. Dang, I really thought that was going to continue. This is the thing with trading low liquidity coins though, guys, is you have giant moves up and down, giant moves. So it's very risky to trade these kinds of coins. With low liquidity, you can have one big buyer that comes in and pumps the freaking thing to, you know, all heck, and then you get the dump right afterwards. But ultimately now, what is going to be important for this coin, if you close this daily candle below this area, I mean, you could see a full reversal all the way back down to take out this low. Yeah. Wow. All I can say is, wow, that's Market Cipher, Crypto Face, Nami, False Prophet. Yeah, that's the creators of them. Sleepy, welcome in, my friend. It's good to see you in here. And same with you, French Toaster. Jesus, guys, that's crazy. Yeah, so Cheechan, I don't know what XPL is, but this does not look good now. Honestly, this does not look good now. The one hope you have here, because this is such a quick move down, if you come down and you bounce from the value area high and then you continue right back up aggressively, it still could be a third wave. Although it's not cool to see that, like, because on the higher time frames, if you're looking at the daily breakout, right, in a wave 3, that would all still be probably within one candle. So it could be a flash crash just to continue up here. But if you close, once again, the daily candle below like the 15-cent area, 15 to 14.75, you might see that full rotation to take out the lows. U.S. household exposure to the stock market has never been higher. Equities now make up 25.63 of total household net worth. Wow, dude, that's pretty crazy. That's actually wild. Okay, Bitcoin. Yeah, I don't like this, what Bitcoin's doing here, guys. I don't like this very much. I'm going to stay in that long position. I'm okay getting stopped out on the long. I'm pretty much at break even. Like, this was my long position, like here, and then I was just looking to take it up to that golden pocket. Actually, I have it. Oh, did I delete it? It was like a 3.7 risk to reward ratio. Retail's buying while everyone else is selling. Well, that's how most ends of bull markets go, right? Retail's always buying, or the dips, they buy the dip, retail buys the dip because they think, oh, it's just going to continue like it has the last couple of years. But this time we're actually in a bear market and it keeps dipping and it keeps dipping. And smart money's willing to sell it and sell it and sell it. And then at the end, when finally they're so far underwater, they just take their losses and cash out, maybe lose 50% of their money. That's when smart money's buying it back. Happens every single cycle. If you're retail right now, we are all retail, and you're starting to buy, in my eyes, if it's spot, you got to be comfortable holding for long terms in case we do go into a bear market, like a real bear market. And remember, the traditional cycles run off like 7-year cycles, not like Bitcoin has a 4-year cycle. I would, and it's like 7 years of like, you know, a few years of bear market. Yeah. I was telling everyone when we on the S&P 500, and I do own some S&P 500 in my traditional account, I was starting to sell as soon, actually after this drop. I think I sold at the local golden pocket area because we took out market structure. Remember, we took out the market structure here, even though it was only an SFP, it broke that. So I was looking to take profit up. I think I did up in this area, but the thing is, the bear divs that we were seeing, look at these crazy bear divs that we were seeing. Like, I was not willing to risk it. And I did buy a lot in, I think it was 2021, when we had that crash. Where was it? Yeah, it was not March. It wasn't March of 2020. It must have been 2022. It was in this area. I started buying some of the S&P 500. Not a lot, guys. Not anything significant. Like life-changing, I should say. I just want to check this XPL again. Like, did it USDT? Wow. Yeah. Man, unfortunately, guys, like, you have a couple hours left until daily close. This does not look good. The fact that look at, even on the 1 hour, you wicked up to the daily and to the non-log golden pocket, but your candle body's pretty much closed at that 1-to-1 correction zone. So if the bulls are going to step this in and continue the impulse to the upside, they need to do it like now, like immediately. They need this thing to go right back up. If not, we could see over the next months, 2 months, a move down to take out your lows at 7 cents. Actually, it could happen in a couple weeks. Okay, Render looks like it's about to make a big move. Let me see this RNDR. Lost X, welcome in, my friend. It's good to see you in here. Let's see, Render. And let's see, Divine. So in every bear market, retail sells because Bitcoin keeps dropping and dropping even when people expect a bottom. Yes, exactly. And then once they finally sell, that's generally when the bottom is in or close to in, right? Last cycle, for the first time in a bear market, went below prior cycle all-time high. Yep. Yes. And even this cycle on Bitcoin, we're at our prior all-time highs. Actually, I have on one of my charts a box. Let me just look at this render real quick. You are seeing some potential bear divs here on the 4 hour. Pretty aggressive, actually. The one thing with render is, I mean, you're just in this little range. I would just be playing this range here. You're at the value area high. If you can break out of it, then these bear divs probably won't play out. And you're most likely actually going to take out this high at $2 or 198-ish. The bullish scenario here is that you're in. Hold on, let's see. Yeah, actually, I kind of like that because look at this. Looks more like a 3-wave corrective move down. So because that was a 3-wave corrective move, this could be wave 1. This could be a wave 2 in here. And then you're stacking 1-2s. 1, 2, 1, 2. You would want to see a 3 come in here and then some 4 5s come in. But because this move started here with a 3-wave corrective move, you could come take this high out at like 199, 198, whatever it is. Yeah, pretty much 199-ish. I would also just look at your channel here. Like, that's your channel. You're just trading within this channel. What did I just do? Let me fix this. You have 1 hour bear divs confirmed. You already have 4 hour bear divs. Remember, you're at the value area high. This needs to break out of this value area high. If we start to reject here, you're going to make a significant fall. Unless you're stacking more 1-2s, right? 1, 2, 1, 2, 1. You could come all the way back down towards the bottom of the channel for a 2, and then you would see that breakup. It is common sometimes on the lower time frames to see multiple 1-2s. I would say, obviously, a single 1, 2, 3, 4, 5 is the most common. Then you do you see double 1-2s almost as much as you single 1-2s. As far as triple 1-2s and more, like multiple 1-2s, it's pretty rare compared to the other two, I should say. Yeah, let me check. Let's go to the Bitcoin. I believe one of these is the one where I have. Is it this one? I mean, let's just throw it on there. So you see your prior cycle highs. I took both of them. I took the 65K high. If I can freaking get it. Hold on. $65K high, and then we'll bring that up to the 69K high. And those are your prior all-time highs. Where are we chopping in right now? Prior all-time highs. We did wick a little bit below them. But I believe on the weekly time frame, we have not closed a weekly below it. See that? So that's your prior all-time highs here. That zone between 65 and 69. And you're chopping and forming what could be a base in here, right? Maybe it's going to make one more new low, but you're overall forming a base down here, creating that accumulation. Tap 1, maybe you get a move to 58K for a tap 2. Then you come down like to the 60 again or 62 for a tap 3. You got that accumulation, and then it pushes up. It's a possibility. But I still would like to see one more low overall below 60. Green dot on the daily on Render. Well, it's not confirmed yet because the daily hasn't closed. But you did have some nice bull divs here. Look at these lower lows in the price action. Nice higher lows on the momentum waves on both NAMI and Market Cipher B. Actually, that's the weekly. I'm sorry. Weekly. Now, on the daily, you still had... Yeah, you even had them on the daily. Look at this money flow bull div. Money flow curving up, crossing into the green. So because money flow is just crossing into the green and you have weekly bull divs, this could see some sort of significant break here. Let me just hide this for a second. What you can't see is, because right now, look at on the daily time frame, this looks like a 3-wave corrective move. So if you start to roll over and lose this range low, you are probably going to come down and take out your lows again. The big range that I'd be looking at is since your crash on October 10th, you kind of have this sideways range since then. That's where I'd be looking at. Now you're above the POC. So do you get up to value area high, which is also going to be where that golden pocket probably is going to be. Yeah, where your golden pocket's going to be. 215. I mean, it would be nice to see that. One more move up to get up to 215. And then around 215, I would possibly be looking for a short up there. It's almost like you're forming, in some ways, you were forming a triangle in here as well that might be breaking a little bit today. So you had this triangle. Oh, it's trying to break today, right? You can form triangles in wave 4s. Though, okay, started out with a 3-wave corrective move. Any impulse, you needed to start out with a 5-wave move. That right there is not a good sign. But let's just say that was a wave 1. This was a wave 2. Yeah, and you're coming up to your 1-to-1 to 1.236 target. You can see that high right there at the 1.236. Because this started out as a 3-wave corrective move, and because the larger 3-wave corrective move is rejecting possibly from the 1.236, there is, and we have 4-hour bear divs. I mean, you need to break out of this like quick. You're also at the value area high of this range. Remember that. Okay, guys, I do have to get going. I am sorry we couldn't stay longer, but I do got to get going. I will be live tomorrow as well, 3 p.m. Eastern Standard Time, so please come join me tomorrow. We'll take a look at Bitcoin. We could probably take a look at XPL again. We still might be able to, if XPL closes the daily candle below that 15-cent mark, we might be able to take a short here, like on a retrace, right? Because this could be the wave 1 of a dump. If it retraces up to golden pocket, we might be able to still get a short to look for the overall lows at 7 cents to be taken. So we can still look for that. Now, me personally, I'm not going to be risking too much on XPL trades because it's a low liquidity shitcoin. But yeah, let's see how it works, guys. So thank you so much. Please hit the like button on your way out. Please come join me tomorrow. We'll go through some altcoins. We'll go through Bitcoin. We can even go through some stocks again if you guys want to. We'll just have a good time with it tomorrow. And much love to you all. Thank you all for your support and kind comments. Remember, if you do want to join the Telegram, all you got to do is join BYDFI using my affiliate link, deposit the minimum deposit of $100 or more. And once you've done that, you click the Telegram link in the description of the video. Type in /verify and your user ID for BYDFI, and you'll be into the Telegram. And once you're in, you're in.